Thanks for clicking! The Canadian government is considering implementing new rules to support halal mortgages. That is, a type of mortgage that uses non-traditional payment structures to avoid paying interest.
Okay.
Indeed, the government noted in its 2024 budget that it's considering how to support such a system, noting that it would enable Muslim Canadians and other diverse communities to further participate in the housing market. And while a brief minute on social media will tell you that this move will no doubt prove to be controversial, it does raise a number of key questions. What is it? Has it been implemented elsewhere? And what are the potential effects on the housing market? So what I want to do today is take a look at what the government said, go over the 3 types of halal mortgages, take a look at how it's been implemented elsewhere, and then discuss some potential implications for the housing market. As we'll see today, this is obviously going to be a highly contentious issue, and as the government publishes its findings on these halal mortgages, we'll continue to have updates out on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into these mortgages. Onto these halal mortgages. As mentioned, the government said in its 2024 budget that it's exploring new measures to expand access to alternative financing products, like halal mortgages. The government said that it's seeking to understand how federal policies can better support the needs of all Canadians seeking to become homeowners.
Time machine?
Yeah, maybe not printing up a whole bunch of money leaning on the real estate industry, then acting surprised when every economist could, and I suspect did, tell you exactly what was going to happen. This is from 2013. But I digress. The government said it's looking into a way that it could alter the tax treatment of these products, or implementing a new regulatory financial sandbox. A new regulatory sandbox, meaning that these products may not have to abide by the current regulations and laws. So, how are these mortgages structured? There are 3 types: Ijara, Musharaka, and Muhabara. I probably butchered all 3 of those. First, Ijara, which means lease in Arabic. Under the system, the bank actually purchases the property for the homebuyer and then leases it out until the agreed upon amount is paid. This is a very similar structure to rent-to-own agreements, which are already widely available, wherein which buyers make payments that are a combination of rent, capital, and profit for the financier, the lender. It's also worth noting that these types of agreements, current rent-to-own agreements, are not insurable, which is going to be important later. The second type of mortgage, Musharaka, again I apologize, means partnership. Under this type of agreement, the buyer and the lender both purchase the property, with say the buyer putting 10% down and the lender putting down the other 90%. Then, following the purchase, the buyer pays the lender 2 types of payments: property purchase payments, which are buying shares in the property, and also rent payments, which is the profit side for the lender. And this is one of the types of mortgage that is proving problematic that the government mentioned in its budget, as under these agreements, the buyers are forced to become property maintenance agents for the property, avoiding HST payments for the government. If I'm doing free work for you and you're not paying me, managing the property, upkeep, etc., and I'm not getting compensated, then the government is missing out on that HST.
That's not going to happen.
And finally, the third type, Murabaha, which means profit. Under this type, the bank buys a home and then immediately sells it back to the homebuyer at a profit. Under this type, if the bank buys a home for say $200,000 and then sells it back to the homeowner for say $250,000, that homeowner now makes payments on that $250,000 at perceived 0% interest. It's kind of like, though not exactly like, when you buy a car at a dealership for 0% interest. You're not borrowing for free, that interest is worked into the price of the car.
That's good to know. Good to know.
So, these are the 3 types of mortgages which are compliant with Islamic law. And, as you might have noticed, the UK has had these types of mortgages for years, dating back to at least 2008, although the 2008 article did mention that HSBC had been offering them for the past 5 years. And, in the UK, it should be noted that these types of mortgages are not just for Muslim residents. They're available to everyone. And, I'm assuming if the government were to throw its support behind these types of mortgages, that would also have to be the case in Canada, as you can't have financial products only available to certain groups. With that said, I can't say for sure. Usually when I send interview requests to the government, they are very quickly but politely declined.
You know what? Tell them no.
Australia also has these types of mortgages, and so too does Canada.
What? What?
However, according to EQRAS, a provider of halal mortgages in Canada, there are a number of key complications to their implementation depending on the type. As mentioned earlier, there are complications when it comes to the non-payment of HST, but also the double taxation with capital gains and the double taxation with land transfer tax. If the property is purchased and then immediately sold thereafter to the real buyer, then there's going to be 2 capital gains taxes and 2 land transfer taxes. Further, given the inherent risks in some of these transactions, like the one we mentioned before where their home is purchased for $200,000 and then the buyer owes $250,000, there hasn't been a lot of institutional interest, meaning banks, in this type of lending, which makes sense. As of right now, you can't get default insurance on these types of products, like the default insurance that everyone else pays when they have less than 20% down, from CMHC, etc. With that said, EQRAS said last year that it's hoping to get CMHC support, gaining the ability to insure loans, which would allow it access to much less expensive funding. Given that the structure of these loans, depending on the down payment, can be inherently risky, and default insurance is effectively guaranteed by all of us as it's guaranteed by the government, my guess is that the idea of insuring even riskier loans is going to be particularly contentious. With that said, under these types of arrangements, I think it is possible that Canadians could get those 25, 30-year mortgages like they have in the United States. According to a Globe and Mail article from 2022, under the Murabaha type, the bank would buy the home for $500,000 and agree to sell it back at a mutually agreed price of $732,000. The buyer would lock in payments for 25 years at a rate of 5.49. So, under this arrangement, Canadians could in fact lock in that mortgage for that 25 years, but they would have to be available to everyone. So, the federal government is looking into supporting halal mortgages, which we already have, but it's looking into how it can make changes to the tax code, to the HST, capital gains, double land transfer, inherent in the last 2 examples. But what about the effects on the housing market? All things being equal, it could push up prices.
Okay. You know what? On second thought.
According to a survey referenced but not cited by Mortgage Professionals Canada, 73% of Muslims want a halal mortgage, which translates into 315,000 households. With that said, as mentioned, Mortgage Professionals Canada does not cite the survey, so we can't assess its methodology, though I suspect there are some problems with its conclusions. What we really want to know is not how many Muslims would like a halal mortgage, but how many see a lack of an option for a halal mortgage as their main obstacle to home ownership. So, the government is looking into supporting these halal mortgages, and the move, if implemented, especially if not implemented for everyone, will obviously be contentious. And, as we've talked about so many times before on this channel, anything the government does to try to put more demand in the market will in fact push up prices. This is obviously going to be a highly contentious issue, and the government is set to release its findings on this issue in the fall, and will obviously continue to track the government's support for these mortgages on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.